including ESG factors. Hey there. Over the past few years, the stock market game has gotten a new player in town: ESG factors. ESG stands for environmental, social, and governance, which are critical areas investors consider when assessing a company's true worth. It's not just about crunching numbers anymore. Companies that tick these boxes often show they care about the planet, their people, and how they run their businesses. Why does this matter? Well, investors are keen on sustainability. A company displaying strong ESG values often signals a commitment to long-term growth and risk management. Think about it. A company mindful of its carbon footprint, or one that promotes fair labor practices, may face less hiccups in the future. So, by including ESG in valuation strategies, investors aim for a holistic view. This shift in focus is not just a feel-good move, it's a smart business strategy. Adopting ESG factors helps investors make more informed decisions, potentially reducing risks and finding companies aligned with modern values. Impact of AI on valuation methodology. And now, let's chat about the exciting world of artificial intelligence and how it's shaking up stock valuation methods. AI is becoming a game changer, bringing speed and precision that humans alone can't match. Imagine AI as a super smart assistant sifting through mountains of data to find hidden patterns or anomalies in a company's performance. Sounds cool, right? AI tools can analyze data faster and with greater accuracy. It helps in predictive analysis too, telling us how stocks might perform based on past trends and current data. Plus, AI keeps emotions out, focusing purely on the facts. This is huge because emotional decision-making is a common pitfall in investing. But there's more. AI doesn't just stop at crunching numbers. It also monitors social media, news, and other online platforms to gauge market sentiments and potential impacts on stock prices. So, while traditional methods of stock valuation aren't going anywhere, AI is making the whole process a lot quicker and more reliable, aiding investors in making sharper, fact-based decisions. So, whether you're new to stocks or a seasoned investor, ESG and AI are trends you'll definitely want to keep on your radar. The future of stock valuation, tech innovations in valuation. As we look at the future of stock valuation, tech innovations are becoming game changers. Imagine having a magic lens that reveals the hidden treasures of the market. That's what technology does for stock valuation today. Artificial intelligence, AI, and machine learning are two forces marching at the front. These technologies analyze mountains of data, making sense of patterns that humans might miss. Ever heard of algorithms that can predict stock behavior? Thanks to AI, they're not just a concept, but a reality. Additionally, consider the power of data visualization. Once complex data can now be presented in clear, intuitive formats. This improves decision-making, helping investors understand market trends with greater clarity. Stay tuned, because tech will continue to evolve, and valuations will become even more precise and insightful. How blockchain is changing valuation. Now, let's dive into the world of blockchain and its role in transforming stock valuation. Blockchain, which you might have heard of in connection with cryptocurrencies, is creating waves beyond just digital currencies. Its impact on stock valuation is profound. The technology ensures transparency and immutability. This means there's a clear and unalterable record of transactions. Think of it as a super secure ledger that everyone can trust. Why does this matter for stock valuation? It provides a reliable source of information for valuing stocks. No more shady backdoor deals. Blockchain records every transaction, offering a clear picture of a company's financial health. Plus, it speeds up processes like clearing and settlement, traditionally bogged down by paperwork and delays. Faster processes mean quicker, more accurate valuations. Whether we're talking about tech like AI or groundbreaking blockchain innovations, one thing's clear: the future of stock valuation is bright and promising. These technologies are paving the way for more accurate, transparent, and reliable valuations. So, hang tight and watch as tech continues to reshape the financial landscape. making stock valuation more accessible to all. Conclusion recap of key concepts. Stock valuation might sound like a complex topic, but breaking it down into parts makes it easier to grasp. At its core, stock valuation is all about figuring out how much a stock is worth based on several factors. These factors include the company's earnings, growth potential, and overall market conditions. One popular method is the discounted cash flow, DCF analysis, where future cash flows are estimated and then discounted back to their present value. The price/earnings, PE ratio, is another common tool. It helps investors understand how a company's share price relates to its earnings. We also explored how different valuation models are suited for different kinds of companies. For mature companies with steady earnings, DCF and PE are useful. For startups or high-growth companies, metrics like the price-sales ratio might be more relevant. It's important to understand that no single method is foolproof, and often analysts will use a combination of techniques to get a more comprehensive picture. Advice for aspiring analysts. If you're just stepping into the world of stock valuation, remember that practice is key. Start by picking a few companies and applying these valuation methods. See how close your estimates come to the current market prices. This hands-on experience is invaluable and will sharpen your analytical skills over time. Stay curious and keep learning. Financial markets are dynamic, and staying updated with market trends and economic indicators will give you an edge. Don't hesitate to use resources like financial news sites, webinars, or online courses to deepen your understanding. It's also crucial to develop a balanced perspective. While quantitative analysis is important, qualitative factors like management quality, industry trends, and economic indicators are just as vital. Bring these insights together for a more rounded view of the company you are assessing. Lastly, network with other analysts and join discussions or forums. Sharing ideas and experiences can lead to valuable insights and foster your growth in this field. Remember, becoming proficient in stock valuation is a journey, and every step you take builds your expertise.